Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, December 8th. Hope you guys have a great day so far. We got just one economic news release scheduled, and that is the weekly jobless claim. So last week we had 268,000 people apply for unemployment. The forecast for this week, basic as you can see, came in expectations at 258,000, so it lowered, which is a good sign. Obviously, we'd like to see more jobs created. This time of the year, you always have to be a little cautious of the job numbers, primarily because we got the seasonal jobs that are out there that for the holidays, and then once January pops up, towards later in the month, we'll start seeing people go back on unemployment. So we just gotta be cautious as to not get overly optimistic during the holiday season, as a lot of those are temporary positions here. So let's go ahead and take a look at the headline news today. The stock market's up. Today it started off kind of up and down. It was kind of a back and forth so far this morning, and you'll see later on the bond market did the same thing. It all came, a lot of it took its news from the ECB today. They did have their announcement. Fed will be giving their announcement next week. The big thing with the European Central Bank is that they elected to go ahead and continue their stimulus program, where they're going to purchase bonds out there. But what they did do that kind of spooked the markets was they decreased it from 80 billion euros down to $60 billion. They just most investors thought they were just going to extend it until December of 2017. But what they did was they did go ahead and extend it, and at least up until 2017, or unless they reach certain targets, which again, like them, like us, they're trying to reach inflation goals around 2% as well, and but they decreased it, their amount of purchases to 60. Now this could have an effect on the American U.S. Bonds, as they have been purchasing a large supply of the U.S. bonds as well. So with that lack of interest in the U.S. bonds, obviously the bond prices will go lower, which raises interest rates. So that's something we have to keep an eye on here in the U.S., how much of a factor that might play into our interest rates here. So let's go ahead and take a look, see what they're doing today. We had a nice gain. We did close above the first level of resistance here, but with that decision by the ECB, we lost a lot of those gains. We started off way down here. We even touched the floor here, as you can see by the wick here. Since then, we've been working on some gains here, but we're right at that first level resistance. So we're currently down about 16 basis points from where we left off yesterday. Hopefully we can keep working our way back upwards, but the treasuries were taking, at one point, were taking a lot of our, the yields on the 10-year treasuries were taking a lot of our investment dollars. So, but again, so pricing did worsen today, which results in a slightly higher rate today from where we left off yesterday. Alright, so if you guys like to get more updates throughout the day, just go ahead and come over to Twitter. You can find me on Twitter at Mike Bjork, and you'll see me posting updates throughout the day on the market, and I even do the close towards the end of the day as well. Alright, you guys have a wonderful day. Thanks so much for watching. We'll try to keep this as short as possible, and we'll see you guys tomorrow. Take care.